4 years ago, I was a confused young trader thinking I could flip $1 into $100, or probably flip a $20 into a $500. And I did manage to do a few flips, like $1 to 10. I did 20 to 40, and one time even 20 to 60. And when I got to 60, having seen that 60 was still not going to be enough for what I want to do, I blew the $60 again. Fast forward to today, I'm managing 6 figures prop firm accounts. How did I get here? Could it be luck, or could it be chances? Now, if I'm given an opportunity to go back 4 years ago and manage those small accounts, these are 5 basic things that I will do, that I must do as a person, from what I've learned and from the experiences I've had. Number 1 is quality over quantity. Thinking that you can take more trades, and by taking more trades you're going to make more profits, is a deep and a very big illusion. It doesn't work that way. More trades does not equal more profits. In fact, over trading is the fastest way of blowing up your accounts. Let's take, for instance, you are trading a $1,000 account, and for each trade you're risking $50. It will take you, when you take I think 10 trades, you'll be losing 50% of that capital. Or if you take 100 trades and then you are losing the entire $1,000 account. Let's say your win rate is 6 to 10, and let's assume you win 6 and you lose 10. You observe that the account is still not growing because of slippage, commission, swap fee, and all the other hidden charges that are in the market. So I stopped from taking random trades to sticking on taking only A+ setups. Okay, you trade small accounts like you're trading big accounts. You don't trade small accounts like you're trading this thing that is struggling and needs to grow. Trade it like you're trading a big account, and you find that it will consistently change amount and keep growing, but in a gradual process until you're able to grow it eventually. Number 2, focus on risk to reward ratio, not on lot size. There was a time I used to think that is by increasing the lot size until I blew several of the accounts I was managing. Trading with large lots doesn't make you rich, okay, but put you at high risk. Okay, I used to be in that mindset of thinking, okay, if I could just increase the lot, then maybe I could, and on many occasions increasing the lot, you find yourself making some good move and making some profit. But until when you take the one that hits loss, and you find, boom, everything is wiped off, and you just suddenly realize that you're going to be starting up again, as the small account cannot even survive the losses. Okay, you find yourself over trading. So instead of focusing on making money, start focusing on reducing the risk. Okay, consistency on that little account is what will cause the account to grow. Protect your capital instead of thinking of how to make money. Hedge fund traders and the big players in the market, if they too can protect their capital, how much more you coming into the market with your small capital? You must protect your capital by all means. Number 3, use smart leverage, not high leverage. There are many people who think that when they increase the leverage, the higher the leverage, the better. I used to be like that. I used to think, okay, since with leverage I can be trading, instead of maybe $50, I can now be trading a $50 account based on leverage from my broker. I thought that was going to be better, high leverage. Okay, but that's not better, because the higher the leverage, the more you lose when price begins to go against your prediction. So it is better that you drop the leverage. Until I dropped my leverage to 1:50 or 1:100 and started trading smaller lot sizes, I was not profitable, and I was not able to grow those small accounts or even win any prop account. Lesser stress is what you're going to experience when you notice that you've been able to drop the risk. You're going to experience lesser stress. You're not going to have much panicking, and you're not going to keep on blowing, and you're not going to be over trading. So right leverage keeps you long in the trading system and in the industry. Number 4, scaling in one strategy. When I was switching from one strategy to another, I kept on stopping the growth. Okay, I kept on affecting myself from growing, so I was my problem. Okay, so I felt, okay, if I could just switch from this strategy, when I see myself using one of my strategy and it's no longer giving me what I'm supposed to get, I get into YouTube or read one of the few mentors online strategy and what they put up out there, and I say, okay, let me practicalize this, and I do it, and it begins to win, and I thought, oh, this is the beautiful win, and suddenly it hits losing streak, and I thought, oh no, this strategy is not good enough, and I start thinking of switching strategy. I kept doing this, and I saw that this was not helping me grow. How? Because I began to refine this strategy, and through journaling I now saw that the biggest win was not switching strategy, but instead of switching strategy and reacting emotionally, I started following proven strategy. Okay, so trading is mastering one strategy, not switching from one strategy into another. And then finally, number 5, more capital equals more profits. I thought flipping was the best when I came into this game. I thought I could flip 20 to 40, 40 to 100, 100 to 500, 500 to 1000. But no, most of the big traders and the rich traders you see out there are not busy flipping accounts. Okay, I thought flipping was just the best, but what you need to know is one bad trade wipes the entire account. So if you are in this and you are trying to do flipping, then you are playing a game of chance. What you need is more capital if you know what you're doing, because there are some of you who still don't know what you're doing. You think if you get more capital you're going to do good, but the truth is more capital could even create more problem for you, because number one, you've not dealt with 1, 2, 3 and 4 points that I've already given you first in this video before this number 5. So you've got to deal with 1 to 4 before you start dealing with this number 5. So if you're dealing with number 5 as I'm talking with you now, then you need more capital. Those that are making this money, like I told you, are not flippers. These are people that manage big money, huge capitals. Okay, so what did I do when I saw that I needed much money and I wasn't getting people who could give me this much? I got a prop firm account and I passed it. I saw prop firms willing to give us accounts at prices that we could afford, and I got 200k accounts, at least to a reasonable number. I have up to $1 million 200k account, and I was able to pass these accounts, most of them just in one move, and before you know it, I was already $1 million up in trading prop firm accounts. Some may say I don't know how to pass these prop accounts, but that's why KFC Trading Academy is here. We guarantee your success. Okay, we give you a roadmap and we tell you to scale your account from this level to this level. We give you a timeline and tell you you will be able to pass this account. So if you're looking forward to a place where you go receive the right mentorship and be coached on passing prop accounts, then KFC Trading Academy is available for you. Now we have proven strategies that have brought several results for those on our channel. You must have seen the different results. We have countless numbers of results, and we have students that have graduated from KFC Trading Academy doing very well for themselves. Some have passed prop accounts, some have been able to scale up in their trading career, and they're doing absolutely well, coming into the academy knowing nothing about trading, but now are doing very well. So what I want to get from you is the feedback that you would want to get on board on KFC Trading Academy, and we'll put you through on how you can succeed in your trading career. See you soon.